This was the traditional face of finance, a room of shouting stockbrokers, frantically waving hand signals, and wading through a sea of paper tickets. Today, this physical, human-driven environment is an obsolete relic. The new battlefield is silent. It exists inside pitch-black server rooms, where automated systems process global wealth without human intervention. Human biology cannot match the velocity of these modern data flows, making human intuition a liability rather than an asset. An artificial intelligence system can monitor shifting global variables and execute a complex trade in less than 1 millisecond. By the time a human analyst finishes reading the first word of a news headline, the machine has already capitalized on the information. In this environment, the micro delays of human thought translate directly to lost capital. Traditional financial models are inherently reactive. They look backward, relying on historical trends to guess what might happen next. AI has replaced these models with predictive engines. By analyzing unstructured data, these systems identify market shifts before they become trends. One major source of this data is the billion-scale volume of global credit card logs. By tracking the real-time velocity of these microtransactions, AI can forecast a company's quarterly earnings weeks before they are publicly disclosed. This predictive power extends to global supply chains. Algorithms ingest satellite imagery of these shipping containers in transit can map trade shifts as they happen on the water. This asymmetric information advantage turns data into a weapon used to see the market's future. Human wealth is often destroyed by 3 biological vulnerabilities: emotion, fear, and greed. Trading bots, however, operate with mechanical ruthlessness. They execute strategies 24 hours a day without psychological bias. This technology has given rise to the solo quant, a single individual deploying these complex systems from a laptop. This level of market power was once the exclusive domain of multi-billion-dollar institutions. Technological leverage has broken the link between institutional size and financial success, putting that same predictive power into the hands of the individual. This revolution is creating a permanent fracture in the financial landscape. On one side are the traditional investors, still relying on manual execution and outdated human advice. On the other are those who have allied with AI to automate their financial decisions and capitalize on these invisible leads. Because these algorithms capture and compound every micro-opportunity before a human can even react, the manual investor faces a mathematical certainty of being left behind. The algorithmic takeover of global finance is silent, but its power to shift wealth is absolute. Entering this high-speed environment without an automated defense leaves your capital exposed to systems engineered to exploit human hesitation. In an automated market, relying on biological reaction time to protect your financial future is a terminal disadvantage.